Before we start, a brief disclaimer. This podcast is provided for general information and discussion purposes only and does not constitute investment advice, research, or financial promotion, nor an offer or solicitation to buy or sell any securities or financial instruments in any jurisdiction. The views expressed are those of the speakers at the time of recording and may not reflect the views of any organisation they are associated with. While information discussed is believed to be reliable, no representation or warranty is given, and no liability is accepted for any loss arising from reliance on it. Listeners should seek their own independent professional advice before making any investment or financial decisions.
So, Alex, thanks for taking the time to have a conversation on European venture in general, but we'll cover some other topics. But it'd be great to kind of understand your background and that of Empirical Ventures before we get going.
Thank you, Blair. Thanks for having me on the podcast. So I have a bit of a dual background. So I wear both a hat as an operator in our family office, where I'm principal there and look after our family's investments. But also we started up our own VC with some friends of ours called Empirical Ventures, which was basically used as a way for our family office to set up an external team to look at deep tech ventures in the UK. So my background primarily, our family's background is from hedge funds. My father used to run a company called Man Group, which was Europe's largest listed hedge fund. And from then, we set up a family office about 8 years ago. My background, I started out in his footsteps, working in the city, trading interest rate futures and options for about 10 years. And then decided I didn't want to spend my time sitting in front of screens and being an expert in a very narrow field. I wanted to learn about lots of different things. So decided to jump in and work in the family office we just set up. And I thought the best way to learn about working with startups and in the investment side is to actually work in the startups. So I started out in a day zero startup, which was a fintech business. Learn everything from account opening to FCA registration with that business. I then moved into a scale-up business, which scaled and raised a £20 million series or seed round with the Reuben brothers, which is Britain's wealthiest family. And so really earned my stripes as an operator inside of businesses. At the same time, with the family office portfolio, which is around 45 to 50 different companies at the moment, I sit on the board of a number of those companies and help them scale and help with their fundraising as an operator. So apart from the family office side, which we look at everything from fintech, we do a bit of prop tech, a bit of education tech. We also really wanted to get into deep tech and some life sciences. And it's very different analyzing a deep tech company from analyzing a fintech company. And so I partnered with some good friends of mine that went to university. Their backgrounds are both PhD scientists. One's a physicist and one's a organic chemist. They were both involved with a company called Xylo Therapeutics, which was developing a glucose-sensitive insulin. That was acquired by Novo Nordisk in 2018 for $800 million, and until recently was the largest exit for a university spin-out in the UK by acquisition. So I thought these guys know what they're doing, and we have a very close relationship, and I trusted their diligence, and they wanted to deploy some of the money they earned from the sale of Xylo into further startups and finding the next one. So we partnered together and started Empirical Ventures. It started out as an angel syndicate with family offices that wanted this outsourced due diligence function to invest in deep tech companies. Though is the case often with family offices, we tend to be quite time poor individuals, but cash rich. So after a while of sending out 100-page diligence reports on why we think a company's worth investing in, people said, look, we trust you guys. Actually, can you just run a fund for us? And that's what we did. And it's an the first fund is an SEAS fund, which we're going to run every year. And we're also doing an LPGP fund as well.
Okay, interesting. And so predominantly, if you look at your segments, UK focused, both from investors and where you allocate capital to, company wise?
Yeah, so with the EIS fund, it has to be UK based companies. We think there's enough great entrepreneurial scientists all over the country, not just in the Golden Triangle. So we're backing scientists from across the UK, from down south all the way up into Manchester and Leeds, etc.
And given your background, how much is your decision making on allocating capital a combination of, yes, want great returns, but also want to contribute to the UK economy? Do you kind of have an ethos around that as well? And is that why you're just focused on the UK?
So from the fund perspective, I think we started out there because we started out as an EIS fund because that's where the demand was from the LPs. We're also launching an LPGP fund this year as well, which we will also look to do some European companies. From a family office point of view, we're big believers in the UK and we want to keep investing here. Also, from a management point of view for a company, you need to stick to where you believe you have the edge. From us as a family, we're extremely well connected in the spheres of finance, medicine, universities and politics in the UK. So for us, it makes the most sense we can have the most influence over the companies we invest in and get them where we need to get them to in the UK. And that's why we focus here, really.
Okay. And kind of what are the attributes of what you look for with regards to kind of those breakthrough companies who've really kind of, in this segment, lab to market? Kind of what do you look for?
Yeah, so we have a 48 point metric system on how we score these startups, and we have different tiers of startups as well that we see, from things that are going to be kind of groundbreaking, world-changing startups, which there may only be one or two in a given year. For example, AI, down to ones which we think are replication of ideas, which will be about a tier 5 or a tier 6 startup. And we're really looking for the tier 2 to tier 4 kind of opportunities. Obviously, if you find a tier 1, amazing, but it's very hard to find something so groundbreaking and new. But what you really want to be is new, what we consider absolute leaders in a specific field rather than global technology. And in terms of attributes, we look at everything. We start off, though, as Empirical Ventures, really down to our namesake in terms of we are experts in science, and we really want to take on that role of lead science investor and dig really deep into the science. So everything spans from, does the science work? Do we believe that it's worked? Do we believe that these are the right people to deliver this science and build it out from, because we're after investing in TR level 2 to 4, and we want to take it quite quickly into, up to TRL 6. So we really want to be believing that that's the right team to do it. And once we understand and acknowledge that the science is right, the next thing we really look for is the defensibility of that science. And then once we do that, we look much more into the team and everything else. So, it's almost, we start from the ground, which we think is the science. And once we get that sorted, we then move through different tiers.
And what do you think some of the biggest misunderstandings that exist around science or deep tech in the UK? Is there anything you want to highlight?
So I think, I would say that everything comes from Oxford or Cambridge is a really big one. I think there's really good groups all over the country. And certain universities are experts in certain fields and certain specific parts of science, and it's cherry picking the right academics from the right departments with the right ideas. Also, we have a tremendous amount of knowledge locked up in a lot of our corporates. Where at the moment we're doing a BAE spin out, and we're doing another spin out from a known institution in Harwell. There's not that many CVC spin-outs at the moment in the UK, and it's relatively new for them to do that.
Yeah. And what would, I mean, the standard classic comparison's always going to be the US as far as the size of their capital markets, the capital they attract from outside the US. You know, with regards to the US ecosystem, and this is a very broad question, but kind of the 1 or 2 points where that ecosystem of Silicon Valley or elsewhere in your segment, how does it differ today in this market with the UK or Europe generally?
Yeah, so we talk a lot about this. We actually think that the UK is probably the best place to de-risk science and then to go to the US for traction. And the reason for that is just the arbitrage. Well, there's a number of points. One is the arbitrage on pricings of the startups. Pre-seed here, you're looking, £3 to £5 million. Seed, you're looking £8 to £14 million, and in dollars they would be, pre-seed you're looking at $10-15 million, and seed you're looking at $30 million plus. So you're getting a massive advantage as a VC early doors. A part of the reason for that arbitrage is because we dramatically in the UK underprice the talent of our scientists. To get a PhD researcher in the UK, you can get one for £30,000-40,000, where you just won't find anyone under $100,000 in the US that's up to the same standard. So when you're building a startup and de-risking the science, the UK is by far the best place to do it. Once it gets commercial traction or it gets up to a high TRL level, at that point you should be moving to the US, because obviously you get the higher price and you get the bigger VCs out of there. The only real issue that we often have with the UK ecosystem is what we call the valley of death, which is companies, especially in the life sciences space, that are getting through pre-commercialization, but often, pre-phase one assets in therapeutics that aren't in the clinic yet. It's very hard to fund them in the UK, and it's much easier to fund them in the States.
Yeah. Well, talk to me about that a little bit, because I'd imagine, look at your model, both an investor, but also an operator with regards to supporting your portfolio companies. I mean, a lot of the talent, I mean, they're scientists, they're not business people. Yeah.
Absolutely.
And so, I mean, moving from that mindset to growing a business, what does that journey look like? What are the attributes of the founders that you look for? How is it that you actually help them, focusing on the IP and the delivery of the product versus running a business? Two very different things.
Yeah, and we absolutely look for what we call entrepreneurial scientists. So we need scientists that also can be trained into being very good operators. So we talk very much about T-shaped people as well at Empirical Ventures. So that's people that can talk on the general level with investors, with science, but also with specialists, dig very deep down into the knowledge base up to this point. So can be extremely scientific when they need to be, but also be able to explain their scientific discoveries to a room of generalist people in the room and generalist investors. And it's really hard to find people that can do that. Also, we talk a lot about, it's very hard to find some things you can definitely train people and especially people that have never done this, scientists, when they're moving into spinning out their companies. We've worked with a team. We often do some company building as well at Empirical. We probably build about one a year. And sometimes they come to us, with a terrible pitch deck, but you've kind of got to dig in, meet the founders, see there's something there, see they have something special. You can refine materials, you can train them how to pitch their product well. And, often with that, that leads to very big successes and very good round sizes when you put in the work to get them pitch ready. Especially we're lucky if we're one of the first in and get them to that position. We really think we can help with their pre-seed and seed rounds, getting them where they need to be. But there are certain skills, obviously, that you just can't teach. If people are good and can command a room, it's very hard to teach that. So we do look for, that kind of person that can do that as well. But also, I think, we often look for founders as well that have overcome some challenge in their life. We think that resilience in founders is really important, and when they're able to take blows and keep plowing through like nothing happened. I think it does lead to better outcomes and better founders.
Yeah.
And we also, just look for people that are just proper experts in their field, but also, you know, we don't always, and we're very happy to guide and teach them. We don't always need people that have exited companies before. We're very happy to back first time founders as well.
Yeah. And how do you find, you must have some interesting conversations, whether it's a board meeting or operating meeting, on founders, especially in your segment, scientists. I mean, they're perfectionists as they should be, and they want to be precise. Businesses don't always work that way, right? And you can't get everything perfect, and you have to keep moving forward. Do you have healthy dialogue on prioritization of maybe the founder might want to take more time to get something absolutely right on versus, listen, we need to get things to market and commercialize? How do you balance those conversations?
Yeah, I think quite a lot of the time we're quite lucky in terms of, I think a lot of the scientists we work with aren't perfectionists. Well, there's certain other products where it's like, right, I've got to get it 100% right before it's released. I think people in the science world know that there's time scales, and we work with them very much to make sure, I think one of the bits we really focused on when we invest with Empirical is we really want to understand when we're investing where the science is at that point of time and how far our money will get them to de-risking the science in this point of time, and then leave a certain amount of time afterwards for fundraising once they hit that milestone or de-risk the science. So we come in with a clear objective of, right, you're a TRL level 3, we need to get you to 5, or this needs to have been achieved before your next fundraise. And we've built in a timeline for them to do that. And if the science is falling behind, we often have stepped in before and, gone to the scientific meetings and help them get over the hurdles that they're facing. Thanks, Jonathan, one of my co-GPs in the fund, he's been on the patent of one of the portfolio companies' new IP file because he's helped deliver the science with them and get them up that hurdle.
Okay. So, I mean, on specific scientific domains that you're looking at that could reshape the industry or society at large, given the sector, are there one or two areas that you really think are going to dramatically move the dial on the industry or society as a whole?
Yeah, I mean, there's so much that's changed already since, we've started doing this. When we started, obviously GLP-1s on the thing, and then suddenly in 2 years' time, everyone's talking about weight loss drugs and the impact. And, now everyone's talking about what the after effects are, the off-ramping, and moving them to oral and trying to find ways to make you not lose muscle mass while taking them. So there's so much just in that one area. If you're looking, and that obviously has knock-ons to all sorts of health ones. So, I think areas that are really interesting at the moment. There's a lot going through in genes and gene silencing and RNA therapies at the moment. There's a lot going on in using AI in medical spheres. We've got some, not only drug discovery, but also cancer detection. We've got some looking at, cancers on MRI scans, cancers on blood work. I think.
So on that, not to interrupt, and you'll be pleased, I didn't mention AI.
Yeah.
I'm always hesitant to because everyone's talking about AI. But from your perspective, is there anything specifically where you've actually seen a rapid development because AI was implemented in one of your portfolio companies? I mean, I always like those stories on actual results. I know it's still early days for AI, but anything tangible?
I'd say not at the moment where AI has specifically gone into a certain company and massively sped it up. I know some of the ones looking for certain sequences in some of their gene targets, maybe using AI for multiple predictions on where they think certain things will happen or not.
Yeah.
And then I think if you're looking at other areas at the moment that are very hot, obviously are moving very fast. Quantum and advanced compute and photonics seem to be very hot areas at the moment, as is anything that's kind of defense related is also very, very hot at the moment. So and space as well. So we're looking at all those areas as well.
Yeah. Interesting. So over the next kind of 2-3 years within your empirical ventures, how are you looking to grow? Whether it's by geography or segments, or what are you looking to do?
Yeah, so in the UK, we're really looking to be the biggest EIS, SEIS fund out there. So many of the other funds are so terrible at it. I was shown, and I was shown one person this week going, "Oh, please give me any company raising SEIS because I need to deploy this amount of before April the 6th."
Yeah.
You're kind of like, and one of the other ones that I know that runs a fund, he runs a 20-30 million SEIS fund, and there's 3 of them that run it, and they have to deploy effectively into 4 companies a week SEIS. So the diligence level is just terrible, and that's just not how we want to operate. And we really think there is massive room for someone of very good quality to be running a top performing SEIS EIS fund. So that's I think we're going to be the best in the UK at that.
Yeah, I think you're right. I think that's refreshing, because the old SEIS EIS of LPs thinking tax first beyond the company benefit of getting a return is the wrong way around.
Absolutely.
I mean, that's a nice to have.
Absolutely.
I mean, the tax advantage, but it should really be about actually the companies and the returning.
That's absolutely it. So we really, as we say, we want to put the venture back into SEIS, investing. You're investing in a venture fund that has extra upside, not you're trying to get tax back and put it in venture. That's what we're focusing on there. On the LPGP fund, I think we could be doing something very special there. I think we could be, at some point, Europe's biggest deep tech fund. I think it's pretty achievable for us.
So what's the kind of a single piece of advice you'd give to a kind of a deep tech founder, science-backed founder, as they're kind of internalizing what they want to do, approaching yourself or investors? Any, just from your history or your stories, anything resonate?
Yeah, I would say from us, I think do your research on VCs, because it's very hard to find a deep science investor at early stage. And that's part of the reason on the other side why we started Empirical. So from the family office side, it's very hard to get people to invest in deep tech, because the diligencing is so much more difficult than doing a SaaS company or a fintech company. And then on the other side, so many founders were coming to us going, "Oh, I've got a generalist fund, really interested in what we do," but they were looking for a lead science investor so they don't have to do the science diligence themselves. So really try and find that quality deep science investor for your early rounds. I'd say for us as Empirical, what's really important when we meet founders, I mean, obviously the idea and the concept and the market's really important, but make sure that you really know your stuff, and make sure that everything that you say or do in your pitch deck can be backed up by fact, because that's what we're really checking for is, if you say this in your pitch deck, prove it to us. Where is the evidence behind your assumption on that? And we're approaching it as scientists when somebody is presenting science to us.
Yeah. So, Alex, 2 final questions. They're simple ones that could be on anything. What question do you like people to ask you, and why?
In terms of who? In terms of a founder, or in terms of an investor?
It could be anything. It could be life. It could be your portfolio companies.
I always find it interesting when everyone's like, "What's your favorite portfolio company?" It's a question, because that gives me a good chance to talk about all of them. But
okay, that's a good one. And the second one, almost the reverse. What question do you not like to be asked, and why?
That's a very hard question. Probably that question, maybe the question I don't like.
Good answer. Well, great, Alex. Listen, it's been good talking. We'll talk again, but it's much appreciated for the conversation.
Perfect. Thank you, Blair. And thank you to everyone listening. If you want to hear more about the fund, I'm always happy for Blair to put us in contact. And we're opening our fund this week for deploying in next tax year, so 26-27 tax year. So yeah.
Correct. Exciting. Thanks, Alex.
Perfect. Thank you.